Hi, I'm Tim Kelly from the Montgomery Fund and welcome to this week's Video Insight. One company that we hold in our domestic funds is BWX Limited. BWX owns the Sukin brand of skincare products, which is the leading natural skincare brand in Australian pharmacies. The market for natural skincare has been growing strongly in recent years as increasing numbers of consumers gravitate towards cleaner and more natural products. And the Sukin brand has resonated with those consumers, which has driven very rapid growth in Sukin sales. More recently, BWX has focused on increasing attention on international markets and has enjoyed some early success in gaining distribution for Sukin products in leading UK retailers as well as in other parts of the world. It's hard to predict how Sukin sales might develop in international markets, but the early signs are encouraging and the upside is very material if BWX succeeds. With this in mind, we were interested this week to see BWX announcing the acquisition of the leading natural cosmetics brand in the United States, Mineral Fusion. As a rule, we tend to be a little wary of acquisitions, but sometimes acquisitions can make a lot of sense. So the question is whether BWX is getting good value for money in this instance. On the face of it, the price is not cheap. BWX is paying approximately 11 to 12 times EBITDA, so the current earnings of Mineral Fusion don't provide enough value to make the acquisition work. However, there are a couple of other dimensions to consider in this case. The first is growth. The natural cosmetics market, like the natural skincare market, is growing quickly, and Mineral Fusion is well placed to participate in that growth, and in recent years has achieved sales growth at a rate of around 20% per annum. If that growth rate can be maintained well into the future, that could go a long way to justifying the acquisition price. The second dimension is synergy value. Our view is that acquisitions make sense when the asset being acquired is more valuable in the hands of the acquirer than it is in the hands of the seller, and that implies some level of synergy benefits. In many cases, an acquirer will estimate the cost synergies they can extract from an acquisition through things like removing duplication. But in this case, we don't have quantified cost synergies. We have somewhat more elusive revenue synergies. The thing that's interesting about Mineral Fusion is that it has distribution into more than 3,000 retail outlets in the US. And according to BWX, those retail outlets are an ideal fit for the Sukin brand. Given Mineral Fusion is primarily a cosmetics brand, while Sukin is a skincare brand, there's an opportunity to distribute the two ranges side by side in those retail outlets and significantly enhance Sukin's growth in the US market. Similarly, BWX has the opportunity to add value to the Mineral Fusion business by leveraging its existing distribution channels in Australia. The Mineral Fusion acquisition is not large in the context of BWX's market value, and while the multiple paid is a full one, the downside is contained if the acquisition doesn't work out as planned. On the other hand, if it is successful, the acquisition could generate very meaningful value for BWX shareholders. While there is a level of risk in any acquisition, if the potential upside is significantly greater than the potential downside, then that's the sort of acquisition that we're happy to support. That's all for this week. We'll be back with more next week, and in the meantime, you can follow us on Facebook and Twitter.